So on Friday, the government seized a bank?
Yep, that's what everybody's talking about. It's the second biggest banking collapse in history.
What happened?
Silicon Valley Bank was actually founded in 1983 over a poker game.
That's kind of poetic.
So banks provide two major functions. They store money and they loan money out.
Right.
Banks know that not everybody's going to withdraw at the same time, so they only keep a fraction of the money on hand. The rest they loan out so they can make money off of interest, and the rest they'll invest.
Okay.
SVB became the bank for startups in Silicon Valley, and by the end of March 2021, they had $124 billion in deposits.
That's a lot of billions.
When cash flow was good and interest rates were low, they made a lot of risky investments, bought a lot of bonds, threw luxurious parties, and by the end of 2022, they reported $15 billion in losses.
That's a big L.
The Fed raising rates made it more difficult for startups to borrow or raise money. So they started withdrawing from SVB.
Yikes.
So finally, SVB was short on funds and at risk of a credit downgrade.
What is that?
That basically means it's a risky investment to put your money into.
Okay.
So on Wednesday, they decided to sell $21 billion of bonds at a $1.8 billion loss. They announced that they were going to sell $2.25 billion in shares to cover the loss.
Damn.
People heard about it and withdrew $42 billion from SVB on Thursday.
I mean, I would too if I heard that about my bank.
SVB stock dropped about 60% and another 30% after the market closed.
It's just L after L after L.
By the end of the day, SVB was in the negative $948 million. Now, there's insurance covering up to $250,000 in deposits, but these are Silicon Valley startups. They had a lot more money in their accounts. And it turns out reports show only 93% of the money in SVB was insured.
Another big L for SVB.
Basically, this bank took a bunch of people's money, irresponsibly gambled with it to make more money off of it, and then when people asked for their money back, they couldn't give it to them.
What happened to the people who had money in this bank?
Etsy has actually had to delay payments to sellers, and Stablecoin had about $3.3 billion linked to SVB, so this could crash the crypto market as well.
So there's going to be real consequences for people even outside of Silicon Valley.
Well, the FDIC seized the bank, so now they're going to try and sell their assets and make payments to the uninsured deposits.
It sounds like this should be illegal.
The craziest part is the CEO, Greg Pecker, sold $3.6 million of his personal shares before disclosing the losses.
That's like cashing your chips in while you're bluffing.
Casinos might have more rules than the banks do.